concerns that China may take control of some of the strategic assets of some African countries. This is due to the nation's failure to repay some of the loans owed to Beijing. And some of the assets at stake include mineral resources. Joining us is Dr. Jason Musyoka, a senior researcher at the Department of Political Science at the University of Pretoria. Thank you very much, Doc, for your time this afternoon. I'd like for us to hone in on the West African nation of Ghana. What should we understand about its debt positioning?
So, thanks, Dudu, for having me today. So, firstly, I think there is a much broader issue or trend ongoing around the continent, particularly sub-Saharan Africa, and that is concerns around debt traps of developing countries within sub-Saharan Africa. And Ghana happens to be one of the first casualties of debt trap, and it happens unfortunately that it's largely indebted to China. There are other countries such as Zambia, you got Kenya, and several others, but Ghana is perhaps the most affected at the moment, and that really emerges also from a context of a borrowing all the way from 2005 when Ghana was forgiven its debt as part of the low income countries that were highly indebted, and from there was a borrowing that continued. And then fast forward to 2008, you have a financial crisis, and immediately after the financial crisis, when countries, developing countries trying to stand on their feet, again went into heavy borrowing. And of course, then that came in the context of the recent pandemic, which, there has been what is referred to as a pandemic debt, that you see again increasing debt due to stimulus packages that countries had to borrow for them to sustain themselves. So Ghana is really caught, unfortunately, in that long trend of both external crisis, but also its own failure to manage its own economics or fiscus.
We understand that they got into 4 collateralized loans. What does that mean?
So there are ways in which governments, when they are highly indebted or they're not able to collect enough revenue themselves, whether for development or even just management of their own books, they then borrow money from multilateral financial institutions. This would be IMF. IMF is a lender in terms of crisis. So when there are crises, then IMF comes on board. The World Bank lends largely with focus on private sector, but you have other funders that have been incoming, such as African Development Bank, and then, of course, Chinese Export and Import Bank. And with China, the model that China has tended to use, particularly governments or countries or economies that don't have enough credit, sufficient credit rating for them to borrow money from other sources, China then comes on and suggests that if we fund you for an infrastructure, for example, there are 3 hydropower plants that China was funding in Ghana, they then suggest that because this infrastructure are what economically is referred to as illiquid assets, they are not able to generate revenue immediately. So they are then linked to some form of collateral. And the argument is that, for example, if Ghana is a major exporter of commodities such as cocoa and others, then the proceeds from cocoa would be considered as the collateral for the funding. So it's tethered on what the country or the economy is able to export or produce or gain revenue in the future, given that the asset being funded, such as hydroelectric power generation plant, is not able in itself to generate revenue.
We understand that as the country is not able to honor its debt obligation, China has the right to use proceeds from oil, cocoa, and even sales from the electricity infrastructure to settle the debt. You spoke a little bit earlier on about the debt trap, and then you also spoke about mismanagement of this debt. And so when you take a look at the amount of debt that has been taken out and the situation on the ground in that country, has it translated to the development that should be there all these years later? What has the government been doing with the money?
So Ghana has gone through some very interesting cycle. From the 1970s, of course, it became a middle class and then descended again to a low income, late 1970s. It's gone through a huge debt trap all the way to 2005 when it was forgiven. Then it rose again into a solid democracy, and now back again into the trap that there is. So there has been, of course, irresponsible borrowing from government, but part of this, Dudu, is also tethered on the lenders themselves. And this is not just on China, by the way, it's also the IMF and the World Bank. In 2015, the World Bank itself noted that Ghana was a risk at the time and that it was not really able to manage its fiscus. And even then, it went ahead and borrowed or lent Ghana over $400 million for various projects. So the lenders themselves have been really putting pressure on African countries to borrow. But I think the larger responsibility lies on countries such as Ghana that has gone hugely on infrastructure development. And that is really one of the policy blunders that African economies in sub-Saharan Africa have done, to go big on infrastructure spending, which is funded by external capital, borrowing of loans and so on. And that takes long. And unfortunately, the calculation is that the expectation for Ghana was that as they borrow this large amount of money for infrastructure plans, the commodity prices are going to peak and they are going to be able to repay. But unfortunately, the external climate has been that commodity prices have declined, in fact, from 2008 all the way to 2016. So their calculation or estimation of their revenue was wrong. And I think in that way, then we've ended up with a current situation of serious debt trap.
You've also got the country, or Accra at least, it's one of the most expensive cities in the continent. Ghana has also secured another 3 billion rand from the International Monetary Fund. How far will that go? What does it mean for the average person? Will we see a rise in interest rates and the price of electricity, for instance?
So the 3 billion from IMF is really meant to get it out of crisis, and the way to do that, at least in their current agreement, is that that money is supposed to pay for the debts that the country is in. So it's not really money for development, it's money to service its debts. And I think from any economic analysis, one would argue that there is not going to be much impact on development. And I think, again, that is one of the, it really doesn't get it out of, it's borrowing from Peter to pay Paul. And so the crisis is deep, and one expects that somehow there would be growth. That is the only way that you can really get the economy out of its current trap. And by the way, having mentioned inflation, it's sitting, it went over 40% in just 1 year. So there are several macroeconomic indicators that have performed really poorly in Ghana. And the solution there is if there is sufficient growth that can lead development.
Speaking of development, again, how far has the country come in terms of development? There are some bridges or roads in the capital or in Accra where you see they are not yet finished and they're emboldened in Chinese or in Mandarin. And so how far has the country come in terms of development?
One of the difficulties, and perhaps it's much more of a theoretical issue that is debated a lot in economic literature, is what exactly is development? Is it infrastructure? Is it dealing with issue of unemployment and so on? So the infrastructure-based development is referred to as hard development. And then you have soft development, which refers to employment issues, dealing with inequalities and so on. And Ghana has been quite stable democracy over time, and I think that has kind of tricked a lot of lenders to see the stability of the country politically and therefore to really pump in as much money as possible, not realizing that while that is the case, while political stability is a good environment for investment, there are limits because, just like a household, you have to spend within your means what you have. And so, unfortunately, there is not much. We saw a couple of months ago with youth protesting across the country due to high levels of unemployment, of course, emerging from COVID-19. So there has not been real impact of the current expenditure that we're talking about on soft development, which is human capital development and skills development. That the country is lagging behind. There was also a misconception that a lot has been discussed about democracy leads to development. It's a very linear way of thinking about development because there are a lot of democracies that are not developed and other countries that are not necessarily democratic that are developed. And so there is a theoretical disjuncture there.
Dr. Jason Musyoka, Senior Researcher in the Department of Political Science at the University of Pretoria. Thank you very much for your time.